welcome. Right, we got the CEO of Happy Money Finance on the call, Big Shirley Bag in the building. Shirley, go ahead and introduce yourself to the family. Bless them with the knowledge that they need to hear today.
What's going on, family? What's going on? What's going on? How are we feeling today, y'all? How are we feeling? I don't know about y'all, but I am very, very grateful to be on this call with you guys. I'm not gonna lie to you. Shout out to Josh, shout out to CJ, shout out to the whole militant breadwinner, movement. I want y'all to understand that yeah, what y'all doing is different. I'm not gonna lie to y'all, as young individuals, as people of color, as marginalized people, you don't really see this very often, right? Especially in this area, right? So when CJ hit me up and was like, yo, can you do a tax planning call for the squad? I was so honored because when I tell y'all I was scared of taxes for almost my whole life, I don't know. Let me tell you something about the IRS. The IRS got the best marketing team out there. I'm not gonna lie to you, because people are more scared of the IRS than their own mama. Okay, they'll play with their mama before they play with the IRS. You feel me? So I'm just really, really honored to be here, y'all. My name is Shirley Mejia. Definitely follow me on Instagram, Shirley Big Bag Mejia. Licensed tax professional, philanthropist, entrepreneur, and just your favorite holistic homegirl, right? I'm definitely here to go ahead and pay what I've learned forward, y'all. Prior to becoming a licensed tax professional, I've been in business over 10 years. I'm a day trader, I'm a light worker. I wear many hats, you know what I'm saying? I'm a jack of many trades, right? But taxes is something I hold dear to my heart, because something I really, really don't really like is when people paralyze my people because of fear. Let me tell you that. I don't like that. There's not a lot of things I play with, but I don't play about my people. You know what I'm saying? And I started to realize that taxes, finances, period, had people in a paralysis. But taxes, taxes was a whole different ball game, right? I remember I used to look at my W-9. I don't know about y'all. I don't know where y'all at in your entrepreneurship, journey. But I was a dedicated employee. You feel me? I was a hard worker. You feel me? But when I tell you, when they used to hand me them W-9s, when they when they ask you what's your tax withholding, I used to be like, yo, what this mean? Like, yo, what's this? Can I write? Am I gonna get sued if I write exempt? Should I put zero? Should I put that? That was me, right? I'm not gonna lie to you. Last year, I filed my taxes on April 19th. For some of y'all who don't know, that's the last day of tax season. Okay, so I want y'all to understand that this is coming from somebody who was so tired of being scared of the IRS. I was like, nah, I'm gonna figure this out, right? Because a lot of people teach you how to make money. We all know how to make a dollar. Yo, drop a one in the chat if you know how to make a dollar, right? Let me drop my own one. I'm gonna drop 3 ones at that, because I know how to make a couple dollars. You know what I'm saying? But like, we all know how to make money, but we don't all know how to keep it. You feel me? And that's what a lot of people don't tell you the long game. People sell you get rich quick schemes. They sell you, oh, learn this skill, learn that skill. I remember when I first started trading, my first question was, so how I pay taxes? Like how I pay? Okay, so we making all this money trading, but like, is the IRS gonna come get me? Like, like I even had a scheme that I was gonna move to Puerto Rico because they don't tax crypto. You feel me? Like this, you know what I'm saying? So that's who I am, right? That's why I went ahead and got this started. And I'm gonna go ahead and share my screen. Give me 1 second. I made y'all PowerPoint, okay? I made y'all PowerPoint because I don't know about y'all. I'm a note taker, but sometimes my hands don't work as fast as my brain, and sometimes my ears is working even less. You feel me? So I need something to take screenshots with. I need a whole lot. You feel me? I need a lot of different things. So, my name is Shirley Mejia. I am the CEO of Happy Money Finance. Let me make sure this load first. Okay, we here, we lit, right? Shirley Mejia, CEO of Happy Money Finance. And at Happy Money Finance, our main prerogative is to change the way you feel about finance. Because I know a lot of you guys might agree with all the things I just stated, of the fear, of the anxiety, right? Of the anger. I don't know about y'all, but I spent way too many years being angry about bills that I knew came every month. My rent come every first, but I would still get angry. You feel me? So it was really about cultivating, really changing the way people feel about finance. Because when you understand that money is not the true value, it's the energy you attach to the money, right? That really, really is what allows you to create sustainable success, right? So that's our prerogative. Our mission statement. Okay, sorry. Our mission statement is to help people optimize their finances by automating their systems and understanding their economic responsibility. And if you like me, I need this broken down, right? What does that actually mean, Shirley? So the Happy Money method is a 3-part system, right? The first part of this system is understanding your economic responsibility, right? Having the knowledge of not just the taxes that you're responsible for, right? Not just the taxes you're responsible for, but the other financial obligations required of you and how to pay that in a timely manner, right? I'm going to tell you guys a little story. I remember I opened my first LLC and I was so scared of finances that I paid LegalZoom about $1,100. Ask me for what? To get my LLC. To get my LLC, to get my EIN. I just threw money. I was the type of person that I would just throw money at the problem. You feel me? Because I was scared of my economic responsibility. I didn't understand it. And because I didn't understand it, I didn't understand my obligations. I didn't understand what was required of me as a business, let alone a person, let alone a business owner, right? Because once your personal finances is one thing, but then when you become a business owner, it's a whole different ball game, right? So just understanding your economic responsibility so you can understand what is being asked of you, because a lot of the time the monster we create in our mind of our finances is a lot smaller than what it actually is. You get what I'm saying? So the second part of the Happy Money method is automating your system, right? Because once you understand the system you need, right? And the only way you can understand the systems you need is by getting knowledge, by educating yourself, right? So now once you educated yourself on your economic responsibility, right? Now you're able to understand the systems that you need. Because guess what? The system that Shirley's need is different than the system that, that CJ needs, right? The system that, let me see, some of the participants. It's different than the system that Brian needs. It's different than the system that Ali needs, right? Because guess what? Not everybody's operating the same type of business. Not everybody's operating at the same level of monetization. A 10-figure earner, not a 10, let's manifest that. A 10-figure earner, a 6-figure earner, their responsibilities, the systems that they need is a whole lot different than somebody who is making maybe $5,000 a month. You feel me? We all start somewhere. The person who's making shout out to one of my mentors, he said 6 figures is a lot different than 6 figures. You get what I'm saying? The systems that you need as an earner that's making 100,000 is a lot different than the systems that you need when you making 900,000, 99, you know what I'm saying? Like it's a lot different, right? And some of these systems may include bookkeeping, payroll, budgeting, automatic payments, stuff like that, right? So the third step of this method is optimizing your business, right? Because when you understand your economic responsibility and that allows you to automate some of those systems, guess what happens? You get to free some of your time. And once these systems are automated, it allows you to start working on your business instead of working in your business. So many of us, a lot of the reason why people who look like me and you don't see them at these high levels of Amazon or Google or all these 6-7 figure businesses is because we're too busy working in our business and not on our business. Because when you're working in your business, you don't really have a lot of time to work on how you're going to scale your business. And what I mean by that is, like, I remember when I first started, I was making all my marketing material. Guess what? I ain't doing that no more. Shout out to New Renaissance Consulting. Like, my marketing team got that. You get what I'm saying? I don't gotta work in that part of my business. Now I can do stuff. It frees up my time so I can do calls like this that scale my business, right? So drop a 1 in the chat if you're here with me, right? Because I want to make sure that makes sense to us, right? Okay, dope. I want to make sure that makes sense, because that's something I really didn't understand as a new business owner, right? So the first thing I'm gonna go over, why these slides ain't sliding? Hold on. Okay, so the main problem that we see is that most people have no idea what a tax return actually is. I didn't. I'm not gonna lie to you. I didn't know what a tax return actually was, right? Nor do we know how to reduce a tax bill. What are the proper procedures to reporting your income or understanding tax code? I'm telling you, I used to think that the IRS was gonna knock on my door if I wrote exempt on my W-9. Y'all hearing me? Like, that's the main problem. And as a business, that's the problem of most people, right? But as a business owner, understanding how to maximize your positioning is super essential to your growth, right? So on the right here, we have this pie diagram, right? And the reason why I have this pie diagram is because I want you to understand that 41.1% of the revenue of the IRS, right? Because the IRS, I want y'all to understand that the IRS is a business, right? Just like the school system is a business, just like hospitals are a business, just like all these, the justice system is a business, right? The IRS is a business, right? The main revenue of the IRS is individuals' taxes. It's so crazy to me that the IRS makes their most amount of revenue from individuals, not even business owners, individuals, the taxes that they pay, but we're the people who know the least about taxes. Isn't that crazy? I feel like that is I feel like the IRS knows what they do. You know me? The IRS knows what they doing with that one, right? So that's the main problem. So I want to break this down, right? I want to break this down because even when I found out what this was, I was like, nah, you're wilding. Like, what? You're wilding, right? So what is a tax return? For most Americans, a tax return is the IRS returning the money that you lent them over the course of the year, right? I'm talking about W-2 employees, right? So I don't know about y'all, but every time I used to get my check, I used to be like, so when the government worked these 40 hours? Like, who feel me? Like, drop a 3 in the chat if you feel me. I used to be like, damn, I guess you clocked in right next to me. I just ain't see you, huh? Right? And that's because that's money that you are lending them, right? And what affects how much money they're taking out of your return, they're taking out of your paycheck is your tax withholding, y'all. So your tax withholding is when you get hired at a job, right? They give you a W-9 form. And on that W-9 form, you're basically letting them know how much taxes they're allowed to take out of your check. Yep, you letting them know. They don't just take it, you letting them know, right? So I'm going to explain to you the difference between the tax withholdings, right? The lower your tax withholding, the more money, the lower your tax withholding, the more money they are going to take out of your check, okay? So some people like to, when you understand a tax return is the money you lent them over the year, right? Some people rather give the IRS their money at the end of the year rather than the IRS give them their money at the beginning of the year. Does that make sense? So let's say I'm somebody that I'm like, you know what? I'd rather keep all my bread. And if I gotta pay taxes at the end of the year, I'll just pay taxes. You're gonna have a higher withholding, right? You may even put exempt, right? Guys, just a little myth. You ain't gonna get sued. You ain't gonna get in trouble if you put exempt. You just probably gonna owe the government a little bit of money at the end of the year, right? So you want to ask yourself, how would I like to start my year? Some people, they got a little problem with savings. They got a little problem with savings. So guess what they do? Sorry, guys. Guess what they do? They put the lowest withholding, so the government, the IRS, can take the most out of their taxes, so that way at the beginning of the year, they have a little more to start the year with, right? That's somebody who's bad with savings, right? That's somebody that's the psychology of tax withholdings, if that makes sense, right? Drop a 3 in the chat if that makes sense. I want to make sure that you tax and pay. You know what I'm saying? Okay, dope. We all on the same page, right? So that's what a tax return is, right? So I want y'all to understand that a tax return is not necessarily a good thing, right? A tax return can be that you overpay taxes, and that's why you're getting all that money back. I want y'all to understand that, right? Because within my first year of doing taxes, sometimes people will get $200, $300, $400, and they're like, damn, this little bitty tax return. And I would have to explain to them, yo, all that means is that you ain't give the IRS any tax. You ain't lend them no money. And I think that's a good thing for some people. If you like it that way, that shout out to you. I really like people with my money. You feel me? So maybe that's the way you'd like to do it, right? So now I want to break down what a tax bill is, right? Because I don't know about y'all, but if the IRS, before I got educated, if the IRS ever told me I owed some money, I was like, I don't know what you're talking about. You better figure something out, because I don't owe you nothing, right? I don't owe you nothing, man. I actually had a client, especially as entrepreneurs, I actually had a client this year that had an amazing tax year. An amazing year in business. They made almost 6 figures, like chef's kiss, the type of year they had, right? But guess what? They were a business owner. They made about $80,000, but they didn't pay no taxes all year. So guess what? When it came tax time, they had a tax bill, right? So I want you to understand, typically you are subjected to pay 15 to 20% of tax on all income earned, right? If you don't, you will acquire a tax bill. Tax bills are not necessarily bad if you are prepared for them and you understand how to utilize them for your benefit, right? So I'm gonna give you a pro tip right now. So let's say I want to buy a house, right? And I'm a business owner, meaning I don't have any proof of income, right? And I want to buy a house that I need a bare minimum income of $100,000. I can report that I earned $100,000 on my tax return. But guess what? You're going to have to pay 15 to 20% of taxes on that $100,000. But guess what you have now? Now you have proof that you made $100,000. But you get what I'm saying? Y'all get what I'm putting down? Because sometimes you want to buy that car, but you don't got the income minimum to get that car. Sometimes you want to buy a house, but you don't have the income minimum to get that house. But you can utilize a tax bill and you could pay what you got to pay for $100,000 worth of income, and you get what I'm saying? If y'all get what I'm putting down, right? So that's what a tax bill is, right? So now we're gonna get into deductions versus credits, right? And guys, when I tell you deductions versus credits, this like it really shifted my paradigm, right? So the difference between deductions and credits is that deductions reduce the amount of your taxable income, and credits directly add to the amount of your return. So let me explain something to you, right? Let's say Joe made $40,000, right? But he has $10,000 worth of deductions. Now he only has $30,000 of taxable income, right? So that 20%, that 15 to 20% that he has to pay on his income is less because his income is less. Does that make sense, y'all? That makes sense, y'all? Okay, dope, dope, dope. I just want to make sure that makes sense, right? So every person has a standard deduction that varies based on your filing status and the amount of dependents you have, right? So there are 5 different filing statuses, right? The difference between, because this is something that actually really, like, I was really confused about when I first like started filing my own taxes. I was like, well, this says single and I'm single, but like I'm the head of my own household. Like I pay my own bills. So am I head of household? So I'm going to explain to you the difference between these 5 filing statuses, right? Single is just you have no dependents, nothing, right? Head of household means that you have a dependent. You cannot claim that you are a head of household if you have no dependents, right? You are automatically single, right? Then you have married filing joint, you have married filing separate, and then you have qualified widower. Yeah, that's how you say that, widower. You're not gonna get me today. So the only difference between these filing statuses is that the standard deduction on your taxable income changes. What does that mean, Shirley? So a single person, the standard deduction for a single person is $12,500. So no matter how much you make, the IRS is gonna deduct $12,500 from your taxable income, okay? Now, when you're a head of household, that standard deduction is increased, right? Because you have a dependent you take care of. So the IRS is like, okay, we're gonna reduce the amount of taxable income that this person is subjected to, okay? That's the only difference between your filing statuses. But all I really want you to understand is that if you have a dependent, you are the head of household. If you do not have a dependent, you are single, okay? That, just keep that in mind, okay? Because sometimes I'll see parents or I'll see somebody who, maybe you take care of your mom, right? Maybe your mom is your dependent. Maybe your grandma's your dependent, right? Maybe you take care of your nephew and your nephew's your dependent. And I'll see them, they'll say that they're single. And now that heightens how much taxable income you actually have. And listen, we in the game of keeping all the money we make, all right? We wanna keep all our dollars, all right? So keep that in mind. Now, when it comes to credits directly add to the amount of your return. And guys, I'm gonna open this up for questions at the end. So if you have any questions at all, there are no dumb questions, especially when it comes to taxes. So make sure you write them down, okay? So credits directly add money to your return, right? There's a really dope credit that I actually told CJ about. And it's called the Employee Retention Credit. The IRS will literally give you $32,000 for every W-2 employee that you are able to retain for the year. Now think about this as a business owner, right? If I own an LLC and I can choose how I pay myself from my LLC, and I know about the employee retention credit, do you think that I'm gonna choose to pay myself as a W-2 employee, or you think I'm gonna choose to pay myself as a 1099 employee? Drop it in the chat. Nah, math is math. And he said, can I be my own dependent? I feel you. That's how the spending be spending, right? The spending be spending. So the question was, the employee retention credit, right? They are giving you $32,000 for every W-2 employee you have on your payroll for the whole year. So you owning an LLC and you deciding how you're gonna pay yourself. Are you gonna pay yourself as a W-2 employee, or are you gonna pay yourself as a 1099 employee, right? You get what I'm saying? Y'all hear me, right? Y'all hear what exactly you right, Katie? No question mark, W-2 employee. And you know what's the amazing part about being a business owner? You don't even gotta choose, baby. You don't even gotta choose. You can have both of them. You could pay a portion of your salary on a W-2, and then you could pay your portion of a salary as a 1099 employee. Because I want you to understand, a 1099 employee, if you are compensated by a 1099, you are able to write off your business expenses. Y'all don't even hear me yet, but guess what? I got the next slide for y'all. So y'all can really hear me, right? Let's see if I could. I gotta change the settings on this. I like being able to change my slide with the arrow. I don't like all this little button pressing. So deductions, right? Let's get into deductions. Deductions is so dope, especially as a business owner, especially as a 1099 employee, right? Because again, what are deductions, guys? Deductions is your ability to reduce your taxable income, right? So if I made 40,000, what's 20% of 40,000? I ain't too good with math. Whatever 20% of 40,000 is, right? I could reduce that 40,000 to maybe a $20,000 income with business deductions. So guess what? That 20% of taxes is way less when I'm being taxed on $20,000 worth of income instead of $40,000 worth of income, okay? Now, something I want to explain to you guys when it comes to deductions is that, how can I say this? As I used to be a nail tech, right? I was a nail tech for maybe like 2.5 years. And when I was a nail tech, I thought that I had to, even when I was maybe up until like this year, I'm not gonna lie to you, up until this year business, I thought I had to generate a certain amount of profit. I thought I had to make a certain amount of money so I can report my income, my business income, and so that way I can write off my expenses. Because everybody hears that, oh, business write-off, business write-off, business write-off, business write-off. But do we truly understand what a business write-off is? And are we truly maximizing business write-offs, right? So all you need in order to write off all those business expenses, all you need is to be in pursuit of monetization. I need y'all, if y'all get anything from this call today, y'all, I need y'all to get this. All you need to do to utilize business write-offs is that you must be in pursuit of monetization. You do not have to profit nor produce a certain amount of revenue to qualify for business deductions, okay? So what does this mean? When I was in nail school, let me tell y'all something. When I was in nail school, my nail technology license, right? The state board cost about $300. That's what I had to pay to get licensed. Then the course itself was, I believe it was $2,800, right? I could have wrote that $2,800 off. I could have wrote that state board exam off. The Ubers that I was taking to school, right? The food, and we're gonna get into all those deductions. The food that I was purchasing when I was at school, right? Or when I was taking clients. What else? My equipment. Oh, because let me tell y'all something. Getting your nails done is expensive, but you know what's also expensive? Buying equipment to do nails. I spent so much money when it came to nail drills, nail polish, nail art, all that stuff. All those supplies are write-offs, okay? So the most common business deductions, you have home office. Let me tell you something. Listen to what I'm saying to y'all. If you have a desk in your home that you work from, right? Whether you're a content creator, right? And you put a tripod up and you make content, right? Whether you are a vlogger and you watch sporting events, right? And then you go ahead and open your camera and you vlog your opinion on sports, right? Whether you have a sports betting business where you give out parlays, right? If you have a desk in your home that you sit at to do any of these things, right? I could pick up my phone right now and be like, yo, this is the parlay for the day. I can write off a portion of my rent as my home office. I want y'all to understand what I'm saying to y'all, right? If I use this whiteboard, this desk and this whiteboard, this call right here that I'm doing, it qualifies as a business, right? So guess what? I can write off a portion of my home. And what's so dope is that depending on how much of the space that you use, this is between me and you, okay? We talking, right? Depending on how much of your home you use, it influences how much of your rent you can write off. So I'm a content creator, right? I make content, like follow me on Instagram. I make content based on, tax preparation, the do's and don'ts of taxes, busting tax myths, just educating people, right? I make videos all over my crib. I be on my balcony with it. I be on my couch with it. I be in the kitchen cooking with it. I be in my bathroom with it. I be in the bedroom with it. Guess how much of my rent I could write off? We like guess how much? Because I use my whole house. You get what I'm saying? Let's say you are a gym enthusiast, right? And you are a fitness blogger, right? Guess what you could write off? Your fitness membership. You can write off your gym membership, right? Because you go to the gym in pursuit of monetization. So that means you can deduct that business expense. You get what I'm saying? So now the second one is cars, right? And when I'm talking to y'all about cars, sorry, hold on, I'm gonna close this. With cars, right? Mileage, right? How much you drive back and forth from, let's say you're somebody who has an online store, an e-commerce store, right? You got to drive to your house, to and from your house to the post office, right? Maybe you're one of those people, I don't know if y'all see those people on TikTok that they be going to Dollar Tree and they'll come up on mad stuff at Dollar Tree and they'll go ahead and resell it at Amazon. All those miles from there to the Dollar Tree, that's a write-off, right? Your car insurance is a write-off. Your car note is a write-off. Repairs and maintenance, all them oil changes is a write-off. Those tire changes is a write-off. If you need your car to do business, anything that is tied to that car is a business expense that is deduced, right? Now, keep in mind, you want to take a percentage of that, okay? A percentage of that, especially if you don't have a second car, because you are using your car as, if you're still using your business car also as a personal car, you are only able to write off a percentage, okay? Courses and memberships, right? Yo, shout out to the militant breadwinners community, right? What you pay for this Discord server, I'm gonna be honest with you, that's a write-off. That's a write-off, baby. That's a write-off, right? Your cell phone bill, right? If you're a content creator, I need my cell phone, right? I used to be a network marketer, right? I was hitting the phones all day, every day. My cell phone is a business expense. My Wi-Fi, where we trade, right? My Wi-Fi is a business expense, right? I can't trade sometimes I could trade in the dark. It's not very helpful, but I can. But my light bill is a business expense, right? This laptop, shout out to my mentor. He kind of shamed me into buying a MacBook, but we're not going to talk about that right now. But guess what? My MacBook is a write-off. Let's say you're a content creator and you need to go buy a camera. You need to go buy a microphone. You need to go buy a new phone because you need a better quality camera. These things are write-offs, guys. any advertising or promotion, right? So as my first year tax preparer, I had a lot of word of mouth advertising, right? So let's say I told CJ, right? I was like, hey CJ, you know, I told all my clients, I was like, hey, you know, I have a referral program. If you refer somebody to get their taxes prepared with me and they get their taxes prepared, I'll go ahead and shoot you over $25. Every time I sent somebody $25, that was my promotion budget. That's a write-off. That is a write-off, right? If I paid somebody on, you know, Instagram ads, those are write-offs. If I spend $50 a month on Instagram ads, write-offs, right? What else? If somebody's a TikTok influencer and I say, hey, can you post my page? I'll pay you whatever your rate is. That is a write-off, right? Travel and meals, those are write-offs. I used to be part of a company where they used to have so many conferences, right? They used to have so many company events. Guess what? Every single one of those company event tickets, a write-off, right? All that food I bought, a write-off. Those Airbnbs, a write-off. Those meals, a write-off. And what's dope is that you have 2 years to write off all these business deductions. And the reason I mention that is because just because you have, let's say you put $20,000 into your business this year, but you only, in order to maximize your return or in order to minimize your tax bill, you only need $5,000 worth of business deductions. You could save the other 15 for next year. Maybe next year you didn't invest that much money into your business, but guess what? You can use those deductions to roll over to the next year. You have 2 years, guys, 2 years. Let me check the chat, make sure we on the same page. And I'm definitely gonna answer any questions, y'all. I'm gonna answer all these questions. Let me close this up. Okay, so that's that on deductions. And then, so credits, right? Credits are super dope because like I told you guys, they automatically influence and impact your return, right? So some credits to be aware of are childcare credits, right? And what's dope, okay, so let's start here. For credits, you wanna make sure, let's go back, because something I didn't mention about deductions is that you do not need receipts. Please, 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 please. We are in 2022. I love you guys so much. I don't know y'all, but I love y'all. I don't care. Please do not go to your accountant with a box full of receipts. Please do not go to your accountant or to your tax preparer with a bag full of receipts. They're gonna charge you more. They're gonna charge you more, but they're gonna charge you more. The best way to do this is open a business account, right? Open a business account, get a business debit card. I really say you should get a business credit card and swipe, because you can use your bank statements instead of receipts. And guess what? Now you don't got to look through all these paper receipts. You don't got to be like, oh my God, where is that receipt from Staples 3 months ago when I went and bought that printer? Oh my God, you don't got to, it is less of a headache. Okay, so make sure, open up a business account, get you a business checkings, get you a business credit card, and swipe, y'all. Swipe. We are in 2023. No more paper receipts, please. I love you. No. Save us the headache. So, but now back to credits, right? So when it comes to credit, you have to have proof of credits, okay? Don't be playing with the IRS and their credits. You feel me? Because with the IRS don't play about their credits. They will come get it back in blood. All right, they will. Okay, so let's say let's say for your child care credit, right? This is one that our parents like to look past because they think that you have to have formal care, child care, to claim this credit. You don't, right? I helped a young lady this year, single mom. I love helping my single parents out because kids is expensive. So a single mom, I was like, yo, I seen that she didn't give me any expenses for childcare. So I called her and I'm like, yo, girl, First off, you be having 2 or 3 jobs. Who's taking care of your daughter when you're at work? And she's like, oh, my grandma. And I'm like, well, that's you get money for that. Like, you qualify for the child care credit. And she's like, yeah, but I don't really pay her anything. And I'm like, okay, well, what do you pay her? And she was like, well, sometimes I pay her $20. I'm like, okay, how often does she take care of your child? She's like, well, she take care of my child 5 days a week. $20 times 5 is 100. There's 52 weeks out of this. There's 52 weeks in a year. That's $5,200. $5,200 that you're paying in child care. You deserve money back for that. You qualify for the child care credit. I was talking to my sister. She did the same thing. She's like, I'm like, yo, sis, you don't pay for child care? She's like, nah, I don't pay for child care at all. And I'm like, well, how do you get people to take care of your kid? Well, not your kid, my nephew. I shouldn't say it like that. But how do you get people to take care of, your son? And she's like, well, I gotta buy my niece food every time she takes care of my son. Girl, that is compensation. You are compensating someone for taking care of your child. You qualify for the child care credit. Ding, ding, ding. You feel me? You get what I'm putting down? So another credit to be aware of is the earned income credit, right? The IRS actually gives you money for not earning a lot of money, but there's a minimum requirement, right? So the minimum requirement is that you make at least, for this year, you make at least $7,000, I believe it's like $7,300 you have to make to have the earned income credit. You have to be aware of this, right? Because that way you understand how many deductions you need to implement to reduce your taxable income in order to qualify for some of these credits. The third one is a dependent care credit, okay? I'm gonna say something, and I ain't trying to hurt nobody's feelings. Who got a significant other who don't pay no bills? Y'all live together, but they don't pay no bills. You don't even gotta drop it in the chat. Just think about it, right? I've had significant others that we've lived together and they don't pay no bills. They ain't pay no bills. They ain't work. They was living good, okay? Guess what? You were dependent, baby. You were dependent, and the IRS finna pay me for taking care of you, okay? It don't matter how old they are. They could be over the age of 24. They qualify for a dependent care credit, okay? So maybe that baby daddy or that baby mama who don't really be playing that, you know what I'm saying? That they qualify as a dependent. You feel me? You better go get you that dependent credit. You feel me? And the two other ones that people aren't aware of is, again, that employee retention credit and then that solar tax credit. So if you own a home and you put solar panels on it, you also qualify for a credit. Now, keep in mind, when it comes to that dependent credit, you have to provide for more than half of their cost of living, okay? You know what I'm saying? That's all. I'm gonna leave it right there. I ain't gonna say nothing else about y'all. I ain't gonna say nothing else, right? Oh, not this starting over. Oh, okay, hold on. So I know I gave you guys a lot of information, and I really hope that you guys were able to retain it. Definitely look over your notes. This is something that is going to save you so much headache, so much heartache, and it's going to save your pockets a lot of money for years and years to come. So how would I plan for this 2023 tax year, right? The first thing I would do is I would research what credits you qualify for, right? So that way you can start planning ahead. That way you can make sure that, okay, I own an LLC. I know the employee retention credit is out there. Let me make sure I pay myself as a W-2 employee this year so I can go ahead and qualify for that credit, right? Hey, maybe I'm reluctant to get to pay for a babysitter, but if I know if I pay for a babysitter, I'll get that money back at the end of the year. Maybe I won't be so reluctant, right? Make sure you research these credits that you qualify for, right? Second thing is organize and keep track of all your expenses and write-offs when it comes to business expenses, right? Even those those personal expenses, right? Because let's say I'm somebody that, God forbid, I had to pay a lot of medical expenses out of pocket. Me, I'm a single individual, right? I have no kids, I have no dependents. If I pay more than 12,500 in out of pocket medical expenses, I get some of that money back. Those then become deductions, right? So make sure you organize and keep track of your expenses. The worst thing that you could do for yourself is wait until January 2024, and now you're looking through all your bank statements. Now you have anxiety. Now you're like, oh my God, where are these receipts? This, then the third. Save yourself the heartache. What CJ said, listen, the 5 P's. Proper preparation prevents poor performance. Prepare now, right? The third thing is that I would learn what systems you and your business need, right? And I say you and your business, right? Because, hey, maybe you're not an entrepreneur yet, but hey, maybe you need to implement a system of budgeting, right? Maybe you are a business owner and you need to start bookkeeping, right? Because what bookkeeping is, it is keeping track of all those expenses and write-offs now, right? Every single month. The fourth thing is understanding your financial responsibilities, right? Again, like when I first got my first LLC, I literally threw, how much was it? $750. I spent $1,500 on an accountant before I ever made a dollar on my first business. Why? Shirley, why did you do that? What is wrong with you? Why did you do that? And it's because I didn't understand my financial responsibilities. You get what I'm saying? And then the fifth thing is gonna be to save. If you are not a W-2 employee, right? Let's say you are working as a 1099 employee. Maybe you are an independent contractor. Maybe you are starting your own business. Maybe you are operating your own business. Make sure you save 15 to 20% of your income, okay? Because you want to make sure that you're prepared at the end of the year. If you do have a tax bill, you want to make sure that you're prepared, because the worst thing that you could do is have an amazing business year and then you're hit with, oh, you owe the IRS $15,000, $20,000. Shout out to my client. He had to pay that because we know how to maximize write-offs over here. You know what I'm saying? So he didn't have to pay $15,000. We actually were able to save that client over $14,000, and because we were able to utilize those expenses and write-offs, right? And guys, the number one thing I'm gonna tell you guys is make sure you invest in your education when it comes to this. Do your research, educate yourself, but the moment you're able to automate some of these systems, whether it's getting yourself a bookkeeper, whether it's getting you somebody who understands how to do your budgeting, right? Whether it's somebody who is doing your payroll for you, right? The moment you're able to automate these systems responsibly, you don't understand how much time you're gonna free up in your life. Like, you really, really don't understand. So the last slide before I open it up to questions, definitely, if you got any value from this call, definitely follow me on Instagram. The first Instagram, Shirley Big Bag Mahia, that's my personal Instagram. There's a lot of value on my Instagram. And then the Happy Money Finance Instagram, we're gonna launch something super, super heavy for our online community. It's definitely in the works. And if you want any extra, if you're somebody who kind of needs a little extra help, I have a free training that I'm actually offering for free, completely free. You go to the truthaboutaxes.info, and you'll be able to gain access to my training on the most common deductions and write-offs for people. And if you're somebody who is looking to still prepare your taxes, because you still can file your taxes, definitely hit me up. If you're somebody who's looking for a bookkeeper, if you're somebody who's looking to scale your businesses or has any business service needs, shoot me a follow, hit me up, shoot me a DM, and I'll be more than happy to help you guys. So with that being said, do we have any questions? Because I know that was a lot. Let me look through this chat. I know there was a couple questions in the chat. I don't know if you guys can unmute yourselves. Okay, so I'm gonna start with Kaylee, and then y'all could just raise your hands, and then we'll go ahead and do it that way. So when you get your LLC, what tax form do you use for that? Kaylee, what do you mean? What tax form you use for that? Like, what tax form you use to get your LLC, or like what tax form you use to write off your expenses? I don't know if you guys are able to unmute yourself. Let me see. I'm gonna unmute you, Katie. Give me 1 second. Ooh, I don't think I know how to do that. Give me 1 second, y'all. Katie. Yeah, I don't know.
Hey, it's Kiana. You actually unmuted me. Can I ask my question?
Absolutely, girl.
Well, Shirley, thank you so much for this call. I know that, growing up, we didn't learn anything about financial literacy. And I remember like my mom just telling me, okay, just put a 0 and check these. And I never knew why. And, HR wasn't their responsibility to explain anything to me. And then, you Google it and you kind of get discouraged because it's just so much information. So it just kind of, it's kind of something that happens. But I have a question. So now originally I used to be a project manager, but now I'm moving into consulting. So now I have the opportunity to, instead of being like a W-2 employee, to do a C2C and contract my consulting firm. So my question is, would it be smarter to go through the C2C and then contract myself as the consultant? Or what should I give myself a 1099, or should I give myself a W-2 from the C2C?
Okay, let me ask you, what are your goals for your business? Like, how much money are you looking to make this year in your business?
Okay, so it gets deeper than that. So instead of doing like a regular business to business transaction, I'm gonna be doing like a transaction between me and the government. So like the government will basically, I'll be a contractor, but then I'll have a contractor under me performing the work. So I'm literally just a person that's gonna be between the actual services rendered from my contractors and the government. So I don't know. So like, for example, the government may give, but let me just add this more context. So the government may say, okay, we got this government contract and it's $250,000. And we're maybe doing constructions. So I would get the contract as K&K Consulting LLC, but then I would have like a subcontractor that would actually be doing the construction. Well, I'm not doing any of the construction. So, but they would give me all the money, but I wouldn't even keep all the money because I would have to pay another company. But then I would have to work too.
What type of business entity do you have?
I have an LLC.
So my suggestion, if you are working with that type of volume when it comes to income, I would change. I would change, like, let's say if we talking $250,000 or something like that, I would change my business entity to an S corp, because you don't want to be subjected to self-employment tax off of $250,000 if you're not keeping $250,000. Does that make sense?
So even though I'm got all these but that's just only one contract. So like, I'll give you another example. So the person that I'm working with, my mentor, she has made over like $50 million in government contracting because she's like the liaison. So it doesn't, so let's just say like I have one LLC and then I have a few different DBAs. Like I have a logistics DBA, I have a consulting DBA, I have a landscaping DBA. Because I'm doing it under the LLC, I will be charged for all of those.
What do you mean charged?
Charges maybe not the best. For the self-employment taxes?
Would you be subjected? Okay, so
yeah.
So LLCs, right? You are subjected to self-employment tax all the way until you're a corporation. Okay. So all the income that your LLC makes, LLCs, so sole proprietors are subjected to a little more self-employment tax than LLCs, but LLCs are still subjected to self-employment tax. So if I were you, I would pay myself as a W-2 employee. You get what I'm saying? So that way you won't be subjected to so much self-employment tax. Does that make sense? Or I would change to a corporation.
Okay. And let me ask you this. So whenever you're going through the process, like for instance, I get a contract, I should never give them my social and always give them like my business EIN.
Absolutely.
Regardless.
Absolutely.
Okay.
Hands down, absolutely. Thank you so much. So what?
I just wanted to say thanks so much.
Absolutely. Thank you so much for your question. It was an amazing question. It was like a high level question. Anybody else got their hand raised? No. So I'm gonna go. Okay, Brian, talk to me, Brian.
Okay, bet. I was like, I can't even unmute. Yeah, this was a great presentation. I just wanted to like mention that as well. This was very insightful. I followed you on everything, so definitely continue to do what you're doing. My question specifically is, in terms of starting a business, now, all of this in terms of tax consulting is like almost like it's like a sub process within the process of starting a business. Okay. At least that's my understanding of it. So in terms of starting a business, how do you basically figure out which type of entity do you want to be? Like how you were just giving advice just now.
Okay, so I would ask myself how much liability I want. Because the only difference between business entities is the amount of liability you're subjected to, right? Okay. So let's say I am operating a low liability business, right? You could be a sole proprietor because there's not a lot of opportunity for you to get sued. There's not a lot of opportunity for stuff like that, right? But if you're operating if you're operating in a very liable industry, like let's say I'm somebody who gives financial advice, right? Okay. I'm somebody who I teach people how to trade. I give out trades, right? Okay. I personally will get a holding company and open an LLC under the holding company and then operate like that. Because if all business entities it protects your personal assets. You feel me? Because if I'm a financial consultant, if I'm somebody who's sending out signals, right? Sending out trades, and let's say you lose a whole bunch of money and you want to sue me, you are going to actually sue my LLC, and now my personal income is safe. You get what I'm saying? And even, let's say, even gets farther than that. You sue my LLC, and now after you sue my LLC, let's say my LLC gets bankrupt. Guess what? That holding company that owns my LLC is still good. Does that make sense? Okay. So I would really ask myself, how much liability am I okay with taking on? Does that answer your question?
Yeah, no, that definitely helps a lot. I think that's a very determining factor in terms of picking which one, because I was hip to the S Corp. I was going to mention that too, so I'm glad you said that to the previous question. And is it okay if I ask one more follow-up?
Yeah, absolutely. And let me tell you something about S Corps. Don't jump to an S Corp, because a lot of people jump to an S Corp to save themselves from self-employment tax, and then they're subjected to payroll tax, and they're subjected to all this other type of corporation tax. If you're not making over like $75,000, just be okay with the self-employment tax you're subjected to, just as a heads up for anybody. Because the first LLC I ever opened, I was advised by my accountant to get an S Corp, and I ain't need an S Corp. I ain't need that. I'm not gonna lie to you. But of course, Brian, what's your next question?
Sure. So you actually gave me a a different question than what I was going to ask. So with the different entities, when you mentioned before about scalability, the scalability is, I guess, correlated to not only how much profit or net profit you make, but also how many employees or people do you work with? Is that kind of like the idea of it in terms of scalability? Because with the S Corp, in my understanding, you at
Mhm.
least would have over 1,000 maybe employees at that point, potentially. But I'm trying to kind of put like a image in my head, if you will, of like, what does it look like if, let's say, my business became affiliate marketing or something like that, like, and that could be, I don't know, I guess the affiliates, I'm having them as employees or something.
Mhm.
That's what I'm trying to kind of get more clarity around, like what do these structures of the entities look like?
So what I'm understanding from your question is I want you to understand that scalability is not connected. It has nothing to do with the amount of employees you have,
Okay.
nor the amount of independent contractors that you have, right? Because I can be a sole proprietor and scale my business from 0 to 1,000,000. You get what I'm saying? So scalability really is it could depend. It depends on what you're talking about specifically when you're talking about scalability. Because you can talk about, I want to scale the amount of opportunity I want to create in the community, meaning I want to create opportunity for employment. Or I can talk about scalability when it comes to profit. You get does that make sense?
Okay.
So it does that answer your question?
Can you continue to kind of like, I guess, elaborate on, so if it has nothing to do with employees, like you said?
No, it doesn't. I literally had an S Corp and it was me and my cousin. It was just 2 of us and we had an S Corp. You get what I'm saying? The amount of employees or independent contractors does not influence the type of entity that you can have, nor does it influence the amount of scalability.
Okay. That does answer my question for now. Thank you.
Of course, I got you, brother. Anybody else had any other questions? I know there's some questions in the chat. Storm. So you asked, how do you write off for your business? So a Schedule C is going to be your best friend. Okay. A Schedule C is a form that you or a tax preparer is going to use to write off all those expenses. And on a Schedule C, it's literally going to say advertising, contracted labor. It's going to say, it's going to give you all the different categories. You're going to use a Schedule C. So when you get your LLC, what tax form do you use? Oh yeah, Kaylee, I still need more clarification on that one. Great presentation. Let me see if there's any other questions. I don't have any bank suggestions for business accounts. I would just say, look for the one that has the most. First off, do your research. Make sure you do your research, and look for the ones who have the most benefits and rewards programs that are applicable to your industry. Let me see. I think that is the only questions. Does this apply to work from home jobs? Listen, y'all work from home jobs, that's a big come up. Let me tell you that. Make sure you you maximize those write-offs, okay? Where or to who would you put these write-offs in order for it to count? Yeah, on a Schedule C, y'all. And then yeah, I think that's all the questions. You are taxed on your gross profit. And yeah, guys, so if that's all the questions, thank you again so much for having me on this call, CJ. I really, really appreciate it. Shout out to the Militant Breadwinners. I'm just really excited to be on this call, guys. So thank you again for the opportunity, man. And go ahead and follow me on their socials. Thank you. CJ, I don't know if I got time to answer this last question. How I'm going you choose? This is your call. Which one? I don't know which one, so I'm gonna do.
Bet. No, I had passed it to you so that you can help out everybody with their hands being raised. But you said you want to answer someone else's question.
Yeah, I'll definitely answer this last question. Lex, what do you? I don't even think Lex is on this call. Oh yeah, it is. Hey Lex, what do you mean by that?
So honestly, just like everyday income. So for me personally, I guess in my situation, it's just like whatever income I'm getting, I'm like, I guess putting some to the side to build for my business. So that would be like inventory, like Shopify bills, And recently, like I've been good at saving money, but recently I found myself struggling, I guess, with budgeting a little bit. So I guess tips like, I guess for budgeting, I guess if you have any.
No, absolutely. It's crazy because that's actually what I'm focused on right now. We're actually in the works of dropping a course, a mini course. It's called the Thousandaire, and it's literally a budgeting course. But what I would say is that I would audit my income, and I would figure out what percent of my income is my cost of living, right? And once I figure out what percent that is, then I'll figure out what are my financial goals and figure out what applicable percentages fall in line with those financial goals. So for me personally, I was somebody who had a lower cost of living. So I had a lot of money to reinvest and save, but I found myself trauma hoarding. And when I say that, I mean like I would overly pay bills and I would like penny pinch when it came to reinvesting. You get what I'm saying? Because I was operating from a lack mindset. So I had to create myself a strategy. Personally, I follow the 40-40-20 strategy, right? Which is 40% cost of living, 40% to savings and assets, and 20% to keeping and spending, like my pocket money, right? So that way, every single time I got money and I received any type of income, I already knew, okay, 40% of my income is going to savings and assets. And I then prioritize my assets and my investments, right? So I would be like, okay, right now I really want to invest in this course. I know this course costs a certain amount of money. So within that 40%, because that course was my top priority, as soon as I got it, I put 20% of that 40% into that reinvestment pot. Does that make sense? So that's what I would do, because there's no uniform budget. You start with a budget and you maneuver from that infrastructure. And then once you start to get to know your spending habits, once you start, your financial goals start evolving, you're going to start understanding what your specific budgeting strategy should be, if that makes sense, if that answers your question.
That's a bet, man. If y'all got some value today, man, make sure y'all spam with the 7s in the chat. We definitely appreciate you, Shirley, for hopping on. Spam up the 7s for appreciation for the call. The recording is going to be dropped in the Discord, so you guys are going to be able to check that out there. And I'm also going to send it to Shirley. So if anybody here is connected with Shirley, you guys can get it from her, tap in with her for the recording. But with that being said, man, definitely take this information serious, because as Shirley kind of really just broke it down to you guys, our people as a whole just really have been in a situation to where we're in lack of financial growth because of the lack of information. So it's very important for us to utilize everything that we've been gifted with here to teach someone else, right? So I would tell everybody, each one teach one. You know, if you know somebody that needs this type of information, don't be afraid to show them your notes, show them what you know, or refer them to Shirley. You know what I'm saying? Refer them to MBW so we can get everybody growing on the same page and really just seeing the same results together. But with that being said, I appreciate you guys for tuning in. Make sure you guys definitely show some love on Happy Money Finance, Shirley's page. Make sure you show some love on MBW. I'm gonna see you guys from the top or at the top. The only time we ever look down is to help bring you guys up. And if you guys are looking for me, you're looking for Shirley, you know where to find us. You can find us at the beach. Hold on, I think I got this from somebody that Shirley knows too, but they don't know. But you can find me at the beach, man. Or you can find me at the bank. Let's get it.